AMD just reported they were up almost 6% after hours. Now they're up 2.5%. We're going to constantly update you in this video how it's doing. We're going to go over their high-level metrics, major views about the company, their earnings release. Mo will go through it, talk about the very important things that he reads in these things. We're going to go over our 8-pillar process, the things there, the analyst estimates, and then we're going to determine what price to pay for this company based on assumptions about the future. Guys, AMD is nipping at Intel. Some people would say it's better than Intel, it makes a better chip. I have computers with Intel, I have computers with AMD. They're both great, but AMD is the David to the behemoth Goliath of Intel. So obviously everybody's rooting for them. They beat on earnings. Yep. They're expected to make a shade under 58 cents a share. They made 58 cents a share, and they reported $5.4 billion in revenue, estimates of $5.319. Before we go into their more specific data, let's pull up their quarterly income. And last year they did $6.55 billion in the same quarter, and this year they did 5.4. So even though they beat, it's still down from last year, which is very consistent with the rest of the tech and the chip industry. Mm-hmm. There is a slowdown in demand in the chip industry, and unloading of inventory at lower prices is also an issue there. So we will get into that shortly. Let's look at AMD. They're up 500 year to date, 83.7% year to date.
Wow.
That's incredible, Mo.
I saw some stuff on Twitter about people saying how many times there were bets going, how many times they're going to say AI in their earnings call.
And by the way, guys, speaking of Twitter, follow me on Twitter. I'm here. I'm very active.
I have a Twitter now.
Oh, yeah. What's yours?
At real
Mustafa
H.
Mustafa H?
I think so.
If I follow him, just follow me, look for him.
That's what you guys need to do.
And do that.
I'm slowly getting into the tweet game, X game.
I love it. I love Twitter. It's a great place to engage. But let's look at our max chart on AMD.
It's probably wild.
So look at this. Back in 2000, it hit a high of $44.44. It got close in 2006. It did not beat that level until December of 2019.
Wow.
So it went 19 and a half years before it surpassed the 2000 level. Why? Because when you overpay, it takes a long time to recoup and justify that. That's what we keep telling people. So if you bought back in 2000, and by the way, it had to go all the way down to, I think it was $1 a share at one point.
Oh my.
So you had to ride it from $44 to $1 to then get back up to $121 right now. Let's see how it's doing after hours. It's currently up 3.6%. So it's a $189 billion market cap with $23 billion in revenue. Let's compare that to Intel just really quick. I know, Intel's dead. They did $54 billion in revenue with a $150 billion market cap. Okay, so less market cap, over double the revenue, and we hope that Intel has bottomed. No dividend, which makes sense. They're trying to grow, but look at this. Guys, their PE is 480. Their 5-year PE is 128. Their profit margin is 1.7. Gross margin of 44%. That gross margin, I want to compare that to Intel here. Let's see what Intel's gross margin is. 38.3. Not the best. Not great. I think those were higher in the past, and they've really dropped their margin lately. So I'm looking at this going, okay, AMD, let's look at the 8 pillars here. All right, a lot of X's. Remember, guys, if you have our software, you can do a customized pillar, up to 12 different pillars. That way you can do your own things that matter. But the X's we have are, look at this, guys. Mo, did you see this? Shares outstanding up 66%.
Completely forgot about that when it came to AMD.
So let me explain this to you guys. If you're new to the channel, first off, subscribe because you're going to learn a ton and you're not going to want to miss this. If you're already a subscriber and you love us, thank you very much. But let's think about this for a second. Let's say a company has 10 shares outstanding and you own one. You currently own 10% of the business, 1 out of 10. Very simple, right? Mm-hmm. If they issue 66% more shares, that takes them from 10 shares to 16 shares. But guess how many shares you still own? Still own one. Wasn't a split. It was issuing shares. They're issuing shares to pay for losses. Now your ownership goes to 6.some%. Let's say it's 6%. You went from 10% down to 6%. For what reason? Doing nothing but holding your shares, being a good boy, being a good investor, sitting there and waiting.
That's crazy.
That is nuts, Mo.
Especially on a company like this. You expect to see that on
startups,
smaller companies,
startups,
Spotify's.
This company's been publicly traded since
Roku's, those kind of things.
1980, it says.
You don't expect to see that on a company like this.
At
this level of maturity.
So, Mo, do you have any bull bear cases, the press release? What do you got here for us?
So I want to go over the press release. There's a lot of interesting things in here. So the stock price is up right now because they beat. But when you start going through, like Paul said, revenues are down 18% year over year. Gross profits are down 18%. Margins are flat, so that's good.
Oh, that's really good.
Yeah, that's a good thing that those things have stabilized. But as you get down here to the more specifics, data centers down 11%. Client segment revenue down 54%. And there's reasons for all of these things, but everything is down, 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 down. And the stock price is climbing, climbing, climbing.
Go up for a little bit. Go to that chart again.
Sure, right here.
So one thing I want to show you, operating expenses down 1%. Operating income is down significantly, which we expected because of the slowdown in demand.
Yeah.
Okay.
But it is just funny to see all of these things. I was expecting to see good news coming out in a lot of different areas. Now they did guide higher. Let's go to their guidance.
They are guiding higher here?
Current outlook.
Well, that's why.
Yeah, $5.7 billion for the next quarter, third quarter, plus or minus $300 million. Expect non-GAAP gross margin to be 51%, so that's an increase.
Okay. Now, was the 44%, 46% above, was that GAAP? Oh, yeah, that was GAAP.
Yeah.
So that's non-GAAP on the 51%.
Yep.
Okay.
So we will see. Their press conference is going to be at 5 p.m., so about 30 minutes from now.
Hang on a second. Go down a little bit. So actually, it's not by much. Look at this, Mo. You have 50% non-GAAP gross margin.
Okay.
And they're guiding to go up. They're guiding for 51%, so it's not that much better.
It's really not much better.
Because remember, the 44% was so guys, GAAP is generally accepted accounting principles. They adhere to the rules that are set forth. You must follow these rules. Non-GAAP is their way of doing it. And
now I will say the good thing is because it was flat. So where was their gross margin? Okay. Oh, okay.
No, yeah, there it is.
There it is. Okay. So it is going to be an increase over this quarter.
Yes, but
not to the 54% that it was in 2022, second quarter.
Right.
Okay. All right.
So there's a lot of, AMD is still a company that struggles to make money. I mean, let's look at the income statement here, Mo. Let's see here. What did they do back in 2000? Back in 2000, they did $3.3 billion in revenue. And then they were stuck in the $4, $5, $6 billion range until 2019. They just meandered about. Now they've skyrocketed.
Yeah.
Revenues have skyrocketed.
Yeah.
Profit, okay, they actually lost a lot of money here earlier in the 15, 16, 17, rebounded. Now they're making a ton. Well, they made 2.9, 3.4, and then in the last year they've made only $395 million, probably because of the slowdown in demand, offloading chips, etc. So what are analysts saying about this company? They're expecting $288 per share in profit this year and $775 in 2027. So almost tripling. Almost tripling.
That's pretty big for a $180 billion company.
That's really big. Now the question is, don't make your decision based, it's tripling, therefore I'm going to buy the stock. No. You still have to make sure. Guess what, guys? If they issue 50% more shares, this 775 is going to plummet. And I don't know what these analysts are expecting. Are they factoring in share dilution in there? That's the silent killer on investing. And I guarantee not many channels out there, probably none, are talking about share dilution. Yeah. It is the silent killer in investing. If you make a great investment in a great company and they dilute you, you're not going to ride it up with them as fast as they did. Because there's only two ways to fund a business. Debt, you either borrow the money, or equity, you take on more investors. When they're issuing more shares, which is, again, not to be confused with a stock split, where if you have a share, they give you another share with it. This is just issuing more and more shares. You keep the number of shares you have, but now you're splitting all the revenue, profit, cash flow with more investors. You're getting less of the company. And I really, really, really can't stand that here. I really can't stand that.
So, bull and bear cases, just a couple of them.
Let's hear it.
Bull cases, though, they have announced a $400 million investment in India by 2028. It's going to be the largest design center that they have. And then Amazon is considering using AMD's new AI chip to power Amazon Web Service Cloud.
Oh, wow.
So that's pretty interesting. Bears, NVIDIA has the big lead in AI, of course, we all know that, with 20% better and faster chips than AMD's. So I don't think anybody's going to be taking the crown from NVIDIA anytime soon.
Yeah, that's going to be a hard
Seems
one.
like they really jumped on that AI bandwagon very quickly.
So what do you think? How many times are they going to say AI on this call, Mo? Because the call is at 5 p.m. Eastern time, which is 30 minutes from this very second.
I'm going to say...
I have a number in my head.
53.
I was going to say 62.
Okay, we'll see. I'm sure it'll be all over Twitter. So you say 62.
So
I say 53.
54 to 61 is even.
Okay.
You take below 53, I take above 62.
All right. Cool.
All right. Tweet at us to see who won, by the way.
Yeah.
How about you do that?
Yeah.
Tweet at us. And the first person to tweet at us, both of us, saying, hey, who won the bet? Who won the over-under AI? We'll get 1 month free of our software. How about that?
Done.
Okay?
Done.
All good? Sounds great. All right. So let's go to our stock analyzer tool. Now, guys, there's a reason this thing is used over 2 million times since we found it at 1.3 million times last year, and an absurd amount this year. This allows us to take our assumptions about the future and put it into our calculator and tell us, without looking at the balance sheet, what this company should be paid for today. Doesn't factor in dilution of shares, but it allows us to make estimates about the future. Because remember, guys, the future is unknown. We have no idea what the future is. That's why we do low, middle, and high assumptions. You want to be able to cover wide range of outcomes. We do a 10-year analysis. You can do 1 to 20 in our software. I sometimes jump to 20, sometimes I do 10, sometimes I do 5. But for a company like AMD, the only thing I want to do is look at a longer-term perspective just to see, okay, I actually think, Mo, no, let's just do a 10-year.
Okay.
So the first line here, guys, is revenue growth. Okay, well, actually, second line. The first line is ROIC, which is absolute garbage right now in this company, but it's a growing company, so I think the ROIC is going to be...
It's funny to say they're still growing, isn't it?
Well, because don't look at the market cap. Look at the revenue. The revenue still has a lot of potential for growth.
But it's funny to say they're still growing because they've been going at this for so long.
40 years.
40 years.
They've been around since I've been... They've been publicly traded since I've been around. Since I've existed.
Isn't that nuts? And they're still in growth.
So, Mo, give me some revenue growth numbers here.
What about 8, 12, and 16?
Okay.
And 16 is like AI works out, they crush it.
So 16% for the next 10 years.
It's ridiculous.
What did they do in revenue last year? In the last 12 months?
They did $23 billion.
That would take them a $100 billion company. All right.
Doesn't seem
actually, Mo, come and think of that.
Reasonable.
Let's do this. Let's do... No, I think 12 is reasonable.
Yeah.
Okay, I agree with that. Profit margin. Now, keep in mind on profit margin, Mo, when Intel was humming along until the recent fiasco, they were doing 20 to 23% bottom line profit margin.
Yeah.
So the question is, does AMD have that here? They haven't shown it, but could it be there? I think that should be the high range of our estimates.
Yeah. Do you think starting at 8 is too much?
Nope.
Okay, I don't think so either. 8, 16? 24?
Let's do 8, 15,
Okay.
and 22.
Okay.
How does that sound?
Sure.
Free cash flow?
Do you want to do the same thing for that?
Yeah. And by the way, that's why I didn't think your 8 here was bad, because look at the free cash flow numbers. Look at the free cash flow all day long, 8. And in the long run, and by the way, guys, I love the fact that free cash flow is higher than profit margin. That's a definite big plus. Yeah. You know, it sucks for them, though. They're diluting the F out of everybody they're like, hey, thank you for supporting us for years. We're going to dilute you. All right, PE. Now, guys, don't be the idiot who goes, oh, 480 PE currently? A deal is 300. No. Start in your head at 15, and with more growth potential and a higher return on invested capital, you should go higher. And if it has a lower return on invested capital and lower growth returns, you go lower, because the market average is 15. Mo, what do you want me to put in?
11, 13, 15?
Wow. Okay. I think that's too low. I was thinking 13, 15, 17.
Okay.
Because if they start to dominate Intel, funny thing is I was thinking 13, 15, 17 for PE and price of free cash flow.
Really?
You know why? Because
I would make it Mine would be higher there.
Oh, would it?
Yeah.
What would it be?
I actually think I would go 16, 18, and 20 because if they can get 16% revenue growth with those
Okay.
that's what I would say.
Hey, you know what? They are making a good chip.
Yeah. Yeah.
Okay.
That's so funny. Well, now that we all know my desired annual return,
so
11, 13, and 17.
See, I do agree with you on the desired return. I think it's got to be higher because of share dilution.
Yeah.
And that's really a bad thing.
It is. And I did go quarter to quarter here. They look at that. They bought back some shares.
Oh, yippee. 10 million
bought
shares.
back some shares. So maybe we'll see if that begins a trend.
Can you look up and see if they have a share buyback plan?
Sure.
Now, guys.
Let's see if they talked about it here. And if not, I'll go to their 10K.
I hit the analyze button already. I want you to stick with me through the end of the video, but please do me a favor, subscribe to our channel and share this video with somebody who's interested in this company or somebody who just wants a different way about thinking about investing. We look at every investment as the present value of all future cash flow, and we look at buying a stock as buying a piece of a business. If you're able to do that, you can withstand the ups and downs of the market, and you look at the downs of the market as a potential gain for you. Now let's see where AMD is before I go further. They're up 4.7% right now after hours. Again, their call comes out in 24 minutes.
Yep.
So let's see how they end up doing. But here is the data. Do you have a share buyback plan?
So in May of 2021, they approved a repurchase program of $4 billion. February of 2022, they
approved a new stock.
Another one.
Up to $8 billion.
$8 billion. So it is in the works. They're just not doing it.
Okay, that's $12 billion on $180 billion market cap. That's pretty significant.
Yeah.
All right, guys. So again, stay with me at the end of this video. All right, guys. We got a low price of 20, a high price of 85, a middle price of 47. If you pay today's price of 117, that's actually before after hours, you get a negative 8% if the lowest assumptions occur. If the middle assumptions occur, you make 3%. If the highest assumptions occur, you make 12.6. So for me, it's just a waiting game. I just gotta wait. And by the way, even if it hits even if it hits 50, I don't have it on my watch list, but I'm gonna add it to my watch list at $50. But guys, I'm gonna tell you right now, even if it hits there, I hate the dilution game, and it's so big on dilution.
Yeah, I'm hoping that by the time they get there, they're not diluting anymore. But I just don't trust them. That's the problem.
Well, other companies in the past, in the 2000s, stopped diluting, like the tech companies, Microsoft, things like that. All right, guys, thanks very much. Again, subscribe to the channel. You will not regret it. You'll learn something every time you watch a video. Take care.